We're on the brink of an AI global bailout, from Western governments being forced at gunpoint to bail out these trillion-dollar AI companies for growing unsustainably, right as the CEO of OpenAI, Sam Altman, is exposed for secretly planning for this all along. Now, over the last day or two, a lot of news has come out surrounding this, and there is a lot to cover and it's very complicated. So in this video, I'm going to break down absolutely everything that has transpired, why it's happened, and what the real things happening behind the scenes mean for you and I. Now, starting off, there was a lot of background with this insane AI and this insane tech bubble and the valuations. OpenAI themselves are probably close to closing in on a $1 trillion valuation in the private markets right now, sitting at about $300 billion in just March of earlier this year. Nvidia is now the most valuable company in the entire world, 10xing its value over the last few short years. And there's a huge worry in the investor space that these valuations are all spiked by these circular deals between AI companies, and no one really knows if AI will actually be as effective as the AI giants are claiming it will, or if the companies will even end up being profitable as the market is expecting right now. And recently, OpenAI in particular have been accused of being the central key player around which this circular deal and valuation inflation mess has transpired. Now, OpenAI's CEO Sam Altman recently went on a podcast and said that the company is doing well more than $13 billion in annual revenue, and he sounded a little bit testy when he was pressed on how he's going to pay for his massive spending commitments. The host of this podcast brought up reports that OpenAI is currently bringing in around $13 billion in revenue. That is dwarfed by the more than $1 trillion in spending commitments for computing infrastructure that OpenAI has made over the next decade. Actually, the number is $1.4 trillion. And here is the rather weird and defensive way that Sam Altman chose to respond to that. First of all, we're doing well more revenue than that. It transpires that actually the well more revenue is about 20 billion. And second of all, Brad, if you want to sell your shares, I'll find you a buyer. Enough. I think there are a lot of people who would love to buy OpenAI shares. Altman then added that there are critics who talk with a lot of breathless concern about our compute stuff or whatever that would be thrilled to buy our shares. In fact, he said that although there are not many times when he wants OpenAI to be a public company, one of the rare times it's appealing is when these people are writing these ridiculous OpenAI is about to go out of business posts. I would love to tell them that they could just short the stock and would love to see them get burned on that. So Sam Altman got very defensive and very upset, and he didn't provide a defense or an answer to the criticism levied at him at all, and it was all a little bit cult-like, basically saying, if you don't want to be a part of OpenAI, I can find someone to buy your shares off you, and you don't have to be. Don't you dare question me in public again. And I'm not the only person to find this weird and defensive and not at all reassuring. Here's another podcast I found of 3 venture capitalists who are talking about this, and they're worried about Sam Altman's response as well.
Turns out off and sell your shares is not an acceptable answer at scale. And if I'd been a board member at this, you said to yourself, okay, maybe I shouldn't have ambushed him in public. Maybe I should have said, hey, look, I just want to spend some time. You give your CEO the courtesy of not feeling ambushed. You maybe don't do it in a visible place, but you do have it. If you are on the board of a company that's planning to spend $1 trillion, sorry, whatever it is, I can never keep up now, and you only have 12 billion in revenue, it's a totally appropriate board level question to say, how are we going to do this? So
I don't know anymore. I don't know if that's true. As silly as it sounds.
It is beyond silly.
I think there is so much fear among VCs of getting out of step with the most successful founders. There's so much fear. And you guys are going to disagree with me, but I see it all across my portfolio. The better the company is doing, the more everyone's a grin fracker. There's just never a critical word said.
So what is the actual issue going on here? Well, the entire stock market is booming because AI is going to change the world, supposedly, and hopefully, I think is fair to say. Now, companies like Nvidia, they've seen their valuation rise by about $4 trillion since this AI hype started, and all in all, that's probably something like $10 trillion in supposed wealth in the stock markets right now from this AI hope. Now, most of this is hype, and it's driven by these massive deals between the big AI companies like OpenAI buying up $100 billion in computer chips from another AI company, or rather just saying they're going to buy them. Now, OpenAI is the key organization here, having made $1.4 trillion in spending commitments that has inflated the valuations of everything AI. The problem is that OpenAI currently have less than $20 billion in cash right now, about 1% of what they need for those spending commitments, and they are currently losing about $30 billion this year. OpenAI themselves predict that they're going to lose $35 billion in 2027 and $45 billion in 2028. So they are insanely unprofitable, and that isn't going to change for years into the future. And they're going to need, in the end, something like $1.5 trillion to fulfill their spending obligations that they made and to keep running their business. And if they don't fulfill those spending obligations, the entire AI bubble collapses because, say, Nvidia, they lose $300 billion in revenue, Oracle lose $50 billion in revenue, AMD lose $100 billion in revenue, and the American GDP as a whole will basically drop by 1.5% overnight if OpenAI can't make these spending commitments. And now the CEO of that organization is refusing to answer any questions as to how he will meet those commitments and gets defensive and offended when someone asks that question. So yes, the worry that this is an overreaction isn't really fair in my opinion. This is a very fair reaction by the markets to take these comments so seriously. Now, in light of that statement, we then saw that OpenAI's CFO was at a tech conference recently, and she had something interesting to say as well. Sarah Friar, OpenAI's chief financial officer, said the company, which owns ChatGPT, could seek a federal backstop or guarantee that could allow it to borrow more money at lower rates. The company's pitch for government support could be strengthened by concerns that the US economy is being propped up by vast spending on AI. She said a form of government guarantee might allow it to borrow more money more cheaply. Quote, the backstop, the guarantee that allows the financing to happen, that can really drop the cost of the financing but also increase the loan to value, so the amount of debt that you can take on top of an equity portion. She said the White House had been incredibly forward-leaning, had really understood that AI is almost a national strategic asset. A federal guarantee on an OpenAI loan would lower the interest rate, since lenders would be assured of getting their money back if the company fails. A backstop refers to an entity providing funding if other lenders fail to do so. The person interviewing her at this event then said some federal backstop for chip investors as a question, and she responded exactly. She literally, in front of millions of people, said that OpenAI want the government to guarantee any debt that they raise and even let them raise debt from the government directly if they need to, and that guarantee will help them get lower interest rates to help them profit more at the expense of the American taxpayer, promising to bail OpenAI out if they fail. And this was huge news and everyone was talking about it, and it's also incredibly worrying for obvious reasons. But OpenAI realized that this was incredibly unpopular and that it sent shockwaves through the markets, so they instantly go into damage control mode and they tried to change what Sarah originally said. Here's her most recent post on LinkedIn, as you can see. I want to clarify my comments earlier today. OpenAI is not seeking government backstop for our infrastructure commitments. I used the word backstop and it muddied the point. That wasn't enough to assure investors and the markets though, so then Sam Altman, the CEO, released this huge post on X with a lot to run through. I would like to clarify a few things. First, the obvious one, we do not have or want government guarantees for OpenAI data centers. We believe that governments should not pick winners or losers, and the taxpayers should not bail out companies that make bad business decisions or otherwise lose in the market. If one company fails, other companies will do good work. What we do think might make sense is governments building and owning their own AI infrastructure, but then the upside of that should flow to the government as well. We can imagine a world where governments decide to offtake a lot of computing power and get to decide how to use it, and it may make sense to provide a lower cost of capital to do so. Building a strategic national reserve of computing power makes a lot of sense, but this should be for the government's benefit, not the benefit of private companies. The one area where we have discussed loan guarantees is as part of supporting the build-out of semiconductor fabs in the US, where we and other companies have responded to the government's call and where we'd be happy to help. The basic idea there has been ensuring that the sourcing of the chip supply chain is as American as possible in order to bring jobs and industrialization back to the US, to enhance the strategic position of the US as an independent supply chain and for the benefit of all American companies. There are at least 3 questions behind the question here that are understandably causing concern. First, how is OpenAI going to pay for all this infrastructure it is signing up for? We expect to end this year above $20 billion in annualized revenue run rate and to grow to hundreds of billion by 2030. We're looking at commitments of about 1.4 trillion over the next 8 years. Obviously, this requires continued revenue growth and each doubling is a lot of work, but we're feeling good about our prospects there. We are quite excited about our upcoming enterprise offering, for example, and there are categories like new consumer devices and robotics that we also expect to be very significant. We are also looking at ways to more directly sell compute capacity to other companies and people. We are pretty sure the world is going to need a lot of AI cloud and we're excited to offer this. We may also raise more equity or debt capital in the future. Second, is OpenAI trying to become too big to fail, and should the government pick winners and losers? Our answer on this is an unequivocal no. If we screw up and can't fix it, we should fail and other companies will continue doing the good work and servicing customers. That's how capitalism works and the ecosystem and the economy would be fine. We plan to be a wildly successful company, but if we get it wrong, that's on us. Our CFO talked about government financing yesterday and then later clarified her point, underscoring that she could have phrased things more clearly. Tyler Cohen asked me a few weeks ago about the federal government becoming the insurer of last resort for AI in the sense of risks, not about overbuild. I said, I do think the government ends up as the insurer of last resort, but I think I mean that in a different way than you mean that, and I don't expect them to actually be writing the policies in the way that maybe they do for nuclear. Again, this was in a totally different context than data center build out and not about bailing out a company. Third question, why do you spend so much now instead of growing more slowly? We're trying to build the infrastructure for a future economy powered by AI, and given everything we see on the horizon in our research program, this is the time to invest to be really scaling up our technology. So basically, his defense is, yes, my CFO said we want a government backstop, but she was wrong and we don't. Yes, 3 weeks ago, I said the government should be the insurer of last resort for AI, but you misinterpreted me and that's not what I meant. He also said that if we screw up and can't fix it, that they should fail. That's how capitalism works. But this isn't normal capitalism because Sam Altman and OpenAI have manipulated the markets by making public spending declarations of $1.4 trillion that you can't afford, and that has created about a $20 trillion bubble that will destroy America if it falls. He also said he wants a government system for building and owning AI infrastructure. Obviously, that would require the government working with companies like OpenAI, where they would get guaranteed revenue or ownership share in the assets. Basically, OpenAI would get government subsidies under a plan like that. But just to drive home how bad this response was, let's see what ChatGPT, the AI behind this entire bubble, thinks about Sam Altman's statement. In short, it's polished damage control with some real points in it. I'd put it in the carefully disingenuous bucket, not outright lying, but that's very obviously trying to reframe what just happened. Personally, I don't trust Sam Altman at all. I think genuinely he's a horrific person. There was a long history of him being awful. He's actually been accused of sexually abusing his sister as a child. And ChatGPT, his AI, for years would even deny the existence of his sister, claiming that he only had brothers because of her public accusations of abuse against him. OpenAI was also supposed to be a non-profit organization, which Sam has now changed into a for-profit that he will own and profit the most from. And this trend of making outlandish claims about the future to boost his share price and his ability to raise capital isn't a new thing either. It goes back to the very start of the AI hype bubble. Here we can see back in January, OpenAI announced one of their first hype circular deals, the Stargate project. Stargate project is a new company which intends to invest $500 billion over the next 4 years building new AI infrastructure for OpenAI in the US. We will begin deploying $100 billion immediately. The initial equity funders in Stargate are SoftBank, OpenAI, Oracle, and MGX. SoftBank and OpenAI are the lead partners, with SoftBank having financial responsibility and OpenAI having operational responsibility. Masayoshi Son, the chairman of SoftBank, will be the chairman of this new organization. The problem is that Elon Musk very quickly responded, they don't actually have the money. SoftBank has well under $10 billion secured. I have that on good authority. So then what has the rest of the market had to say about this literal chaos? Well, there's this man here, David Sachs, who is a venture capitalist himself and now is the chair of the President's Council of Advisors on Science and Technology appointed by Trump. He's colloquially referred to as Trump's crypto czar or technology czar or AI czar. Now he's pushing massively for huge US adoption of cryptocurrency and AI and other technology. And here are his statements on this whole thing. There will be no federal bailout for AI. The US has at least 5 major frontier model companies, that meaning AI model companies. If one fails, the others will take their place. That said, we do want to make permitting and power generation easier. The goal is rapid infrastructure build-out without increasing residential rates for electricity. Now this is not good. If the AI bubble pops, it will be just like the dot-com crisis in 2000 and the global financial crisis in 2008, and I will go far more into detail on that in this very video in a little bit. But I also want to quickly point out that this problem is not the only thing threatening the US economy. Next year, the national debt is going to hit $40 trillion. Now, as insane as that sounds, it's even worse when we consider the unfunded liabilities for Social Security and Medicare. And I know my audience is as knowledgeable as they come when it comes to the economy, but most people don't know the true risk that the US dollar losing reserve status as its world reserve currency would have on the US economy. The entire nation could collapse under the weight of that $40 trillion in debt. And as I've said many times before, there are forces in and outside of the US which are trying very hard to take the dollar down right now. And this is why thousands of Americans are moving portions of their retirement into physical gold and silver. And my great friends at Augusta Precious Metals have put together a 3-minute report called Debt Will Hit 40 trillion in 2026. Prepare your retirement now. It details how a self-directed IRA with real physical assets may be the best option in 2025, and you can click the link down below in the description to get crucial instant access to this report, or you can text Stoic to 35052 and they'll send the report over. The United States needs to dramatically cut back spending and promote growth, and those are things that the Trump administration is trying to do. But even if Trump succeeds here, it still behooves Americans at or near retirement age to explore physical gold and silver if you have $50,000 or more in your IRA, 401k, TSP, or other retirement account. Let my friends at Augusta Precious Metals give you the information that you need to make an informed decision about your retirement by getting the free report they made for you by clicking that link down below in the description, or again by texting Stoic to 35052. I know deep down the US can overcome these problems. There is no country like America, and the shift against neoliberalism and globalism has been monstrous in recent years, and that is why Americans need to be as financially secure as possible. And so I want you to read that crucial 3-minute report by clicking the link down below in the description now, or by texting Stoic to 35052. Now back to the video, and what is the actual underlying problem here? Well, the circular deals inflating this AI bubble are a threat to the entire American economy. This graph here shows you a really good example, but it itself isn't even the full picture. It's showing these companies' market valuations when this graphic was made about a month ago, but it doesn't show even the quantity or the true quality of the investments in between these different organizations. OpenAI is only worth about $500 billion on the private market right now, but their spending commitments are $1.4 trillion. And these graphs here only really seem to show about $400 to $500 billion of those spending commitments. This graphic here shows basically the same sort of thing, but in a different way. The incestuous relationship between these companies cannot be ignored whatsoever. If one of these companies goes bankrupt, it impacts every other company. If this arrow here disappears, then this arrow here disappears. Then these arrows here disappear. Then these ones disappear. Then these ones disappear. And it all cycles around. None of these companies have the cash to be spending something like $100, $200, or $300 billion on a single push of building infrastructure. It's all just paper money being pushed around these companies together. It is not real economic activity or real revenue for these companies, and it's not representative of the future of these companies either. But the market is behaving like all of this makes sense. A couple of months ago in September, we got this report here stating that Nvidia will invest up to $100 billion in OpenAI and supply it with data center chips, the company said on that Monday, marking a tie-up between two of the highest profile players in the global AI race. The move underscores the increasingly overlapping interests of the various tech giants developing advanced AI systems. This deal gives chipmaker Nvidia a financial stake in the world's most prominent AI company, which is already an important customer. So Nvidia announced a partnership with OpenAI. Nvidia can invest up to $100 billion into OpenAI over time, and OpenAI will use that $100 billion in investment to buy computer chips from Nvidia. Nvidia gets to own part of a huge company, and OpenAI gets to basically end up with $100 billion worth of computers for free. Both companies skyrocket in value based on the news. And in particular, Nvidia's shares rose by as much as 4.4% after the announcement to a record high at the time, while data center Oracle, who is likely going to get something out of this deal as well, their share price rose by 6%. Now, Nvidia's market cap before this deal was announced was about $4.1 trillion, and it rose 4.4% or $180 billion. Oracle's market cap was about $600 billion, rose by 6, so by about $36 billion. So Nvidia added $100 billion to their future revenue, not recurring revenue every year, just a one-off, and it's based on a business that already has to spend $1.3 trillion on other stuff, somehow finding an extra $100 billion when it basically can't. So that $100 billion in extra revenue isn't even guaranteed, but the hype behind a $100 billion deal creates $210 billion in wealth from the markets. This does not make any sense when you actually think about it, and it's deeply, deeply irrational. But unfortunately, it all gets worse. Here we had a report coming out from a Harvard economist basically stating that there is no US GDP growth without the AI bubble. US GDP growth in the first half of 2025 was almost entirely driven by investment in data centers and information processing technology, according to a Harvard economist. Excluding those technological related companies, Furman calculated that GDP growth would have been at just 0.1% on an annualized basis, a near standstill that underlines the increasingly pivotal role of high-tech infrastructure in shaping macroeconomic outcomes. Technically, as Furman notes, investment in information processing equipment and software was only 4% of US GDP for the first half of 2025, yet it accounted for fully 92% of GDP growth over that period. We've also had a report from an infamous big short investor who successfully bet against the housing market in 2008 and literally became a billionaire doing so, saying the same sort of thing, that the US economy is a tale of two cities and that it is not even growing 50 basis points outside of AI investment. So economists and investors are starting to notice that US GDP growth is basically entirely driven by this AI bubble and the hype from what might come in the future from that AI bubble. And it's all on the unsecured promises from a man accused of sexually abusing his sister as a child when he has access to only $20 billion right now and needs almost 100 times that amount to fulfill his promises. Yes, I think it's fair to say that this really is a bubble. Now, what happens when OpenAI falls apart and they can't raise that $1.4 trillion to cover their spending commitments? Well, first of all, is that actually going to happen? Just how much is $1.4 trillion for a company to raise? Maybe OpenAI could raise this money by doing an IPO. Well, the biggest IPO in human history so far was Saudi Arabia's state-owned oil company, which raised $26 billion at a $2 trillion valuation. So let's be honest, it's completely unfeasible for OpenAI to raise $1.5 trillion when it's only worth $0.5 trillion. It would need to be valued at something like 10 to 20 for that to be a reasonable amount. What about something through venture capital then, a funding route? Well, OpenAI already actually holds the world record for the largest single funding raise through a private funding round in human history. OpenAI closes a $40 billion funding round, the largest private tech deal on record, back in March of 2025. So they managed to raise $40 billion at a valuation of $300 billion at the time. They now need to rise $1,400 billion or $1.4 trillion, about 50 times as much, not even being valued at twice as much. So no, they're not going to be able to raise enough money to fulfill their spending obligations through funding rounds in the private markets. What about OpenAI making the money through revenue though, through real money, through real sales and real customers and not Nvidia or AMD? Well, they have currently about 800 million active users on their AI, so they have a huge customer base, but so far only about 5% of their customers pay for any of their services, and they haven't been able to increase that percentage at all in over a year, which means their revenue of currently around about 20 billion a year isn't going to explode from selling to consumers because they're not going to be able to get 10 times as many people using the AI, and so far they haven't been able to get more people to pay for the AI. And so the only possible way for OpenAI to get a hold of $1.4 trillion is from deals with other massive tech companies, the exact same circular deals which are driven by OpenAI and are creating these spending commitments and the problems around it in the first place. So the only way for OpenAI to get out of this is to keep promising more investment So the other companies keep promising more revenue and the bubble continues to grow. Now, the final big problem here I want to mention very quickly is China. China and the US are the only two countries in the world with a real technology industry or a real AI industry. I do not personally think that AI will change the world and cause all of us to lose our jobs within the next 5 years. But within the next 50 years, absolutely, I think there's a 99.9% probability that it will change everything about civilization. But the race between China and the United States is real, and because of that, it's very important. China is an authoritarian communist state that commits genocide against its own people. It would nuke America, Europe, every other country in the world if it thought it could get away with it, and everyone in the AI space knows this. Nvidia's CEO literally just came out yesterday and said that China is on track to win the AI race. AI companies know that if the AI bubble pops in America, China might pull ahead, and the US government cannot allow that. So they will have no choice but to bail out the AI bubble if a company like OpenAI goes bankrupt or fails to meet its expectations to keep the United States ahead. And that means US taxpayers funding Sam Altman's scam, which sadly is where I think this is going to end up within a year or two. In reality, this bailout will be paid for with inflation, by the government printing more money, giving it to OpenAI and the rest of the AI group, and then taking away the purchasing power of your US dollars in secret through inflation. And let's not forget, on top of that, you've seen the headlines as well. You've seen the data that I put to you. US debt is projected to hit $40 trillion by 2026, and that alone could mean more inflation and less buying power for your savings. But add in top another financial crisis and another bailout of the financial system and this looming AI bubble, and the risk of inflation to the dollar is literally through the roof. But thankfully, my friends at Augusta Precious Metals have put together an extremely important 3-minute report about how Americans can protect their retirement accounts from skyrocketing national debt and inflation with physical gold and silver. So click that link down below in the description or text Stoic to 35052 to get instant access today. Of course, if you want to tell me how right or wrong I am, to make a video about something in particular, you can always let me know in the comments down below. I always try to read them. And if you don't want to miss out on my future videos, make sure to subscribe. But if you really want to drive change and help me and everyone else, send this video to someone else. Click the share button and send this video to a friend, a coworker, a family member to help them out as well. AI is destroying the job market. Every week we're seeing a new headline. 6,000 people fired from Microsoft, 30,000 fired from Amazon, 1,800 from Target, 600 from Meta, and the job market's weakness is getting so dangerous that now even Jerome Powell is speaking out about the threat it faces to us all. And apparently this is all